Go pop it for a plan, pop it for me. Turn around and drop it for a plan. Drop it for me.
Good morning, everybody. Again, I have a really great panel here with me today, and we're going to talk to the innovators and the founders of crypto. So directly to the right of me, I have Nadav Hollander from Dharma Labs. Nadav is actually one of Spark Labs Global's latest blockchain investments. And so we're very happy having him over here, and he's working with enabling P2P lending on the blockchain, and we'll talk a little bit about that later. And we have Matthew van Niekerk
맞습니다. 네, 파트너.
from Settlemint. Do I hear voices?
네, 지금 비행기 있었고.
I'm hearing voices.
네.
All right.
네.
It's not me, right?
아니 근데
You're not imagining
저희가
it.
먼저 넣을 수
Your
없고.
Korean is fantastic, by
걔네가
the way.
Yeah.
네, 그러니까
Well, you know,
신청할
this is the
때
problem. I'm
넣고.
traveling too much, and I start hearing
먼저
voices
넣을
in
수
local
없고.
languages.
그러니까 저희가 신청할 때 저희 신청한 다음에
anyway,
20만 불 보내겠다라고
try
하면
to-
그 다음에
to-
20만 불을 보내줘야 되는 거여서.
So we have Matthew van Niekerk from Settlemint, based out of Europe, and he's helping the enterprise to get on the blockchain. So with that, we're going to jump into the first question, and the first question is to Nadav. So P2P lending have been around for quite a while, and what's different about running it on top of a blockchain? And is that the right way to put it, by the way? P2P
So I would probably phrase it a little bit differently. I would say that what we're building is a protocol for generic tokenized debt. So you can kind of think of it as like, if you look at most of the tokens that are kind of out in the ecosystem right now, they're mostly equity-like in a sense. Like people will invest in a token because they think they're going to get some sort of equity-like upside. But in the real world, equity is a much smaller asset class than debt. And so essentially, we're kind of trying to port the world of loans and bonds and just debt instruments in general onto this sort of shared decentralized infrastructure where loans are represented by tokens. So to answer your question, with respect to what is the benefit of using this technology in the context of peer-to-peer lending, if you look at the way the peer-to-peer lending industry actually panned out in practice as opposed to how it was kind of supposed to be, it didn't actually truly end up being really peer-to-peer, so to speak. Like on most of the big peer-to-peer lending platforms, something like 80% of the volume is institutional buyers and not necessarily retail investors. But if you look at what's been happening in the token market right now, there's some sort of like revolutionary thing that has made tokens much more attractive to retail investors than traditional investments. And it's hard to define what that exactly is, but Coinbase has more retail brokerage accounts than Charles Schwab right now, which I think is like really indicative of the fact that like these things are fundamentally different and are fundamentally a lot more attractive to retail investors. So within the context of a peer-to-peer lending platform, when you buy a loan or when you invest in some sort of loan, you might be able to trade it afterwards, you might be able to sell it, but it will only be on a proprietary platform that is specific to that peer-to-peer lending platform, like Prosper's secondary market or something like that. But with tokenized debt, pretty much any time you invest in any sort of loan, you get a token that represents your rights to future cash flows in that loan. And that token is just like any other token, like a Bitcoin or Ethereum or anything like that. And so it's much easier to trade them on any sort of exchange. You don't have this sort of vendor lock-in. And there's a lot more kind of interesting kind of knock-on effects where all of a sudden now you can take, it's much cheaper to take tokens that represent loans and package them up together into derivative debt instruments than it is in the traditional financial system. So I think that there's a lot of, on several dimensions, there's a lot of reasons why using blockchains to represent tokenized debts is a powerful sort of mechanism.
Okay, great. And how many, do you have any idea how many other companies are trying to get in this space right now, or?
Yeah, so there's a miniature arms race, I'd say, for kind of becoming like the debt protocol. I think there's a lot of people who've stumbled upon the same sort of insight that it's inevitable that there will be some sort of standard protocol for the way we represent debts on blockchains. I would say the primary differentiator of what we're trying to do is that most of the other kind of lending protocols that you've seen are kind of built for one specific use case. So for instance, there will be a protocol for decentralized margin lending, or a protocol for like decentralized bond issuance or something like that. And what we're kind of trying to do is, similarly to how Ethereum kind of created this generic computational platform on top of which you can build, an infinite variety of different applications. So we're trying to kind of create a generic infrastructure layer where you can pretty much represent any sort of debt instrument and build any sort of debt business on top of our platform.
Oh, great, thank you. So, Matthew, Settlemint, you guys are helping the enterprise to get on the blockchain. And so, can you tell us a little bit more about, that process, what type of clients, what the challenges you have, because that's a different space.
Yeah, sure. So one thing, just to kick that off, I would just to qualify it a bit, our core target is enterprise clients. We do, of course, work with startups as well. Just the pricing's different. That's the main difference between the two. But what we're doing essentially is making, if I look at what is the biggest challenge to adoption of blockchain technologies and integration of different technologies into existing operations, the number one challenge that I recognize is that enterprise developers typically do not have let's say the capabilities in order to integrate a blockchain solution or blockchain technology into an existing application. I think the time where we are right now in terms of adoption of the technology, there's a lot of proof of concept type work where companies are hired to build a standalone type application. But this is a phase. I mean, we're going to get past this phase of let's experiment. At a certain point in time, it's all about making sure that there's a revenue being generated by the investments that are being made, and our technology is geared for that. So it's that when that moment comes, and I think we're only about 6 months to 12 months out, where the emphasis moves from experimentation and let's figure out how this stuff works and what it's about. Companies are going to start saying, well, actually that investment needs to integrate into existing applications and also our backend. So that's our technology is basically, you can think of it as a middleware. For blockchain technologies, it's chain agnostic. So we work with about 5 different chain technologies right now. On the public blockchain side, we work with Bitcoin and Ethereum. On the private blockchain side, which a lot of let's say enterprise clients are interested in, we work with multi-chain, BigChainDB, and a little bit with Hyperledger. But that's so we kind of provide connections to all of those different technologies. What comes on top of the connections are let's say frameworks or templates or SDKs that can be used in order to speed the adoption period up and take out a lot of the guesswork and the R&D type work that's required to figure out this stuff. And of course, what comes out of that is an automatic API connection that's seamlessly integrated by any developer into their existing applications. So we kind of bridge the gap between an enterprise's current applications and the blockchain technologies and what that can offer to companies.
And how often do you encounter that people actually want to do this themselves rather than having help through an integrator like yourself, or basically just help us out, we don't know where to start?
Yeah, I think right now, looking over the past 18 months or so, it's really shifting now. There are quite a few companies that were, and I think the sectors that I'm seeing a lot of interest in kind of give me the tools and I'll do it, that kind of an approach. And this is something I should mention, our software is a licensed solution. So this is something that, if you look at sectors like telecommunications, there we're getting, and also supply chain are 2 sectors where we have a lot of the stuff in the telco side. They're looking for, well, how can we use this ourselves? So it depends a bit on the industry, also on the geography and how long are they, as let's say a country or a region, how long have they been experimenting with the technology? And when if I look right now at the Middle East, where we're doing quite a lot of stuff, let's say the propensity to adopt new technologies is very high, and the sectors that are really interested are government, financial services, and telco.
Okay, and that's a good bridge into the next question, follow-up question. So I know you're working on a very interesting project, social cryptocurrency project with the Islamic Bank. So could you tell us a little bit more about that in particular?
Yeah, sure. So the Islamic Development Bank is essentially the World Bank for the Islamic world, and they have 57 member countries representing the financial needs of 1.3 billion people around the world. And What we're working with them on is a project we're calling social cryptocurrency, and essentially using an ERC20 token for that. Basically, we're creating programmable cash for specific subsidy purposes. So if they're distributing money in one of the member countries, the tokens that are being created are very specific in how they can be used. So instead of basically writing, I don't want to say a blank check, but instead of giving a blind subsidy, now it's programmed so that it can only be redeemed for certain purposes, which creates a very clear and transparent system for the Islamic countries that are engaged in this project. And it's very exciting for us. I love the being able to provide use technology in a way that helps people that need it, and that's really exciting for us.
Yeah, I mean, that's interesting also. I've worked in the past a little bit in charity space, and you sometimes run into people, feeling uncomfortable of giving because of the lack of transparency, actually knowing where things are going. So basically, this system actually helps them with the transparency and see exactly where the donation, and they can lock it in. Yeah, perfect. Nadav, so you started out like how long time ago with this?
About 7 months ago.
Yeah, okay. So for let's say a new developer, a new company that doesn't have, let's say, access automatically to a big existing platform, how do you think about growth in terms of growing your service? You're ready to develop, you launch. How do you grow from there?
Yeah, so I think you have to, first of all, take everything with a grain of salt, because I'm kind of indoctrinated in like the Y Combinator sort of ethos of how you're supposed to do things. But basically, I think that building technology products of any kind, whether or not they're in the blockchain space, is like this extremely uncertain environment where you really can't predict like more than a few months ahead what the market's going to look like, what your product's going to look like, how users are actually going to interact with it. So I think that at the end of the day, like, the biggest thing that you have to do is just launch as fast as possible and get some sort of minimal viable product out to market. Learn what's catching with users, learn what's not catching with users, and just pick a North Star metric and try to make that grow by any means possible as fast as possible. And I know that sounds like a bit like a kind of like a reductive just do it sort of answer, but it's like, I think it's about kind of putting blinders on and trying to like ignore the riffraff and get your product out in users' hands and really try to understand exactly what it is that's providing utility to them.
Right, and your target in specific are like developers or?
Correct. Yeah, that's right. So I think that in my personal case, when we went through Y Combinator, this is like right at the beginning of like the token sale boom. There was like probably like a buzzing circle of like advisors and like colleagues and things like that who were like pushing me to do a token sale. They said like this window's going to close, et cetera, things like that. And what we chose to do instead, which I think was smart, is that we actually built out MVPs, and we actually put them in the hands of developers, and we put them in the hands of users. And we saw which things made sense. We saw which things the market was excited about, and we saw which things like didn't make any sense at all, and which sort of like technical flaws existed in the protocol that we were building. And that's kind of put us in a position now where we, like for our upcoming launch, the actual product itself is like much more streamlined. The protocol is much more developer friendly, and we feel a lot more comfortable putting it in front of developers.
Okay, great. So, of course, this is a year, kind of the crazy year of the crazy ICOs, markets, and so on. And we had like an investor panel on before, and we heard their perspective. As guys founders building companies, what's your take on the current ICO market? Is the window closing? Are you considering it yourself for your own companies? What's your take? Matthew?
Well, with our technology, as I described it, it's rather a horizontal technology that goes across different industries, really an infrastructure layer. And for that, in terms of the prospect of doing an ICO or a token sale for our core technology is a bit abstract for me. I don't see how that would really make sense. But we do have some platforms that we incubate internally that are built on our stack. Basically, these are things we incubate and then roll up and stand up as a separate business line or as a separate company. One of them we are doing an ICO for. That's a product that is it's essentially an Amazon for IoT sensor data. So a marketplace for all of the 9 billion sensors that are already out there today. For the owners of those sensors to have a direct path to data monetization. The platform provides an Amazon-like marketplace for them to sell their data directly to end users or buyers of data. The smart contracts behind that automatically remunerate the different parties in the system. And let's say the bulk of the remuneration then, of course, goes back to the sensor owner directly. So that's one that we're doing a token sale. We have a token called Data. So the Data token, we're doing that in about 2 months. We'll have the main ICOs running for that. So we think it's, and the funny thing is on this particular platform, I've had different telcos, and I've also had a few investors that have asked, how can I invest in that? And my response to them as VCs or corporate VCs was, you can buy tokens, which was a bit of a shock for them that we weren't looking for funding specifically for this platform. But I think that we're at the very beginning of a very long trend in terms of the tokenization of assets and things of value that can be used as utility tokens, for example, within such a platform. It's the beginning of a very long trend. It's not going away. The outlook is, it's slowed down a bit, of course. I think I read some statistic yesterday that only, I think it was 70 out of the 170 ICOs that happened in November reached their target. So there was the number that are reaching targets. Now, whether they set their targets too high or too low, that's another question. But it is, I would say, cooling off a bit. But I think that as regulation starts to come in, it will start to actually accelerate, because then there's you open it, people feel more safe and secure with it. And the other thing that I would just like to comment on about ICOs, there's a lot of talk about, well, we need to regulate it, we need to regulate it, we need to regulate it. Well, the reality is there's already regulations out there. The only question is whether people are abiding by them or not. So the regulations in every country is about issuing securities is very clear. The US is a good example with the Howey test to figure out, is it a security? And then how you market it, that's all very clear. So I think that the idea that this is an unregulated market is a bit of a funny one for me, because it's fully regulated in my view.
Nadav, what do you say?
Oh man, okay, lots of thoughts. So
You got 3 minutes.
3 minutes, okay. So I would say 3 main points. First of all, I'm very bullish on tokens in the long term. I think that the majority of the world's value will come to be tokenized in some capacity, including things that we didn't necessarily consider to be assets in the past, things that are kind of intangible, like trust and like reputation and things like that. Number 2, I would say that the space right now is very, very immature. Like, we don't really totally understand how to value these tokens yet. We don't really understand how the pricing mechanism works. We don't really, like, by de facto, we've kind of been pricing these tokens as equity, but they don't really like behave like equity in practice. And so there's a lot that needs to kind of be hashed out in terms of like how you actually do token sales, how like the token evolves over time, what sort of roles tokens play in the governance and evolution of a protocol. And then finally, I would say that if you think that this is, or that we've already seen like the peak of the token craze, I think that we are nowhere near how crazy it's going to be in some point in the next few years. Insofar as if you have tried to invest in a token sale before, like for the most part, it's still kind of a hard thing to do. Like, you still kind of need to be a little bit technical. It requires you to like kind of sort of understand like what blocks are and what addresses are and things like that. It's not like a streamlined experience yet. That's coming. There's a lot of people working on building the sort of regulated, consumer-friendly token sale platforms. Once that happens, and once we have more clarity around the sort of regulatory environment, or at least more standards built out, I think you're going to see like a Cambrian explosion of these token sale models. But I think that right now we're really just at the beginning of it. And so, at least personally, I've chosen to stay away from doing a token sale in the short term, given that there's just not an extremely lucid reason why the protocol that we're building requires it. But I think that there's a very real scenario that at some point in the future, in a world in which like these models are more mature and there's more regulatory clarity, that we would pursue something along the lines of a token sale, a token airdrop, something like that.
All right, thank you so much, Matthew and Nadav, for sharing your wisdom with us, and we'll bring in the next panel. Thank you.
For you, that's what I like. That's what I like. I'm talking trips to Puerto Rico. Say the word.